Hey, Melissa. Okay, so let's see. Obviously, I'm having troubles with my Skype and whatever else, so I'll just have to do this in a YouTube format and just record it for you. And then if you have any other questions, you can just send them to me, and then we can go over those as well. So I'm looking at your list of questions that you asked. Okay, so we're gonna I'm just gonna go through these and kind of answer them the best I can. So your first question is, what is the difference between crypto and fiat? Okay, well, fiat currency is obviously dollar bills, coins, physical money that you can hold and buy and sell, purchase goods and services with, and whatnot, or whatever. Now, traditionally, back in like the 70s or so, fiat currencies or the U.S. dollar was pegged to the gold standard. Since the Reagan administration, of course, the dollar was taken off of the gold standard, and then the creation of the Federal Reserve and all of that horrible stuff came into light and essentially caused the devaluation of the U.S. dollar. So that's kind of what this little chart here, this graph is. I don't know, maybe this one's better. Here, this one's a little bit better. So okay, so I was wrong on the 1970s. So the 70s is when we were removed from the gold standard, but it was 1913, obviously, when the Federal Reserve was created. So since 1913, the buying power of the U.S. dollar, so one U.S. dollar was actually worth what it was, a full $1 back in 1913. And then just over time, with inflation and all of that wonderful stuff, our purchasing power of the U.S. dollar has essentially dwindled. It's taken its steepest dive, obviously, since we removed ourselves from the gold standard. So there's essentially really nothing backing the value of the U.S. dollar except what the government says. So the government says it's worth $1. To them, it's worth $1. But really, this chart is saying that it's worth roughly like 5 cents of buying power, purchasing power. So, and this has been accelerating over the last 20, 30 years. I want to say 30, 40 years maybe, since the 70s, with the U.S. Treasury and the Federal Reserve essentially printing money as we know it. So, I mean, if we see a lot of economic policies lately with the Federal Reserve printing money just off of thin air. It's not backed by the gold standard anymore. So it's essentially becoming about as worthless as monopoly money. And I mean that literally. So some of the best examples that I can come up with, Venezuelan money. I mean, this is, well, I mean, a good example right here. So this is what hyperinflation does to a country. So this is what constantly printing money, backed by nothing, corrupt government powers, and all of that. So one U.S. dollar is essentially all of these stacks of, I think this is the Bolivar, Venezuelan Bolivar. Don't quote me on that. So it's essentially worthless. And it would take stacks and stacks and stacks of these to buy a bread, just one loaf of bread, whereas we might, it might be a $5 bill for us. So that's why there is this push towards cryptocurrencies and Bitcoin, because Bitcoin has a finite supply. Unlike U.S. dollars, they can just keep running the printers and keep printing more money and essentially making the U.S. dollar worthless. Now, this is something that we don't really know yet. So it eventually probably likely happen in the United States and other Western countries as well. Probably all over the world. Obviously, South American countries are going through mass hyperinflation. Africa, and I think some places in Southeast Asia also. So that's why the U.S. dollar can buy more or is worth more in other countries as opposed to what it is here. So that's why it's easier for them to live cheaper. So because we can just keep printing money infinitely and it essentially devalues the actual worth of the dollar. Bitcoin, on the other hand, does not do that because there's a finite supply. So if we will go to, let me see. Okay, so the supply of Bitcoin is limited to 21 million. Now, this number is based on a mathematical algorithm that determined that supply. So, while the US dollar was at one point bound by gold, or at least backed by gold, Bitcoin is essentially backed by mathematics, I guess you can say. So, with there only being 21 million Bitcoin in circulation or in its supply, there can only ever be 21 million Bitcoin. So you can't print more. And this is the same with other cryptocurrencies as well. So if we were to go to coin market cap, and we can just search one. So let's look at Polkadot. Let's see what Polkadot is. Okay, so this is the total supply. So that is the maximum amount of supply that there is. So this is just under 1 billion coins. And then the circulating supply, what that means is that is how many coins are actually out there that can be traded. So if you were to subtract this number from this number, so that means there's about 100 and let's just say 130 million coins that are not out in the market to be sold or to be bought and sold. So that means that the team, the development team, the company, Polkadot company or whatever in this example, has $130 million still, or 130 coins rather, still left in its supply to sell to at a later date at some point. But there can't be any more of this supply created. So you don't run the risk of inflation because cryptocurrencies are essentially inflation proof because of that reason. So right here with Bitcoin, like I said a minute ago, there's only 21 million in its max supply. There is 18 million in circulation. So I don't know if you know anything about mining Bitcoin. It's kind of like mining gold, only you're not using big tractors and dynamite and all that stuff to blow up mountains and rivers or whatever. You're using computers, graphics cards, basically. High-tech graphic card that can run multiple high-speed algorithms for, I don't know, days, weeks, or months even. And the reward is a coin. So just like if you were out with a pickaxe in a mountain and you're digging for gold, your reward would be like a gold nugget. Here in this case, if you're mining for gold using a computer, your reward would be a coin. So there's 3 million, just under 3 million left that can be mined. So this is what is really kind of making cryptocurrencies or Bitcoin attractive as an asset that should be or is intended to use as a hedge against failing monetary policies and fiat currencies. And this is global too, by the way. It's not just the US dollar, it's not just United States dollars, monies, or whatever. All countries are experiencing or going to experience hyperinflation from the past 30 plus years of corruption and failed monetary policies and whatnot, central banks, and all of that good stuff. And also the difference, or why there is this market, why there is a cryptocurrency market, is if look at the way technology has shaped the way that we live. So if we go back in time, we're probably roughly the same age. when we were growing up and we were teens, the way we listened to music on our vehicles or whatever is we would download them to CDs, and then or have a physical CD or a physical cassette that we would put into our vehicles. The same with movies, VHS. Same with movies. It was a physical device or physical asset or something that held these music or held these movies or whatever that and that's how we watched them. Now, as technology has evolved over time, everything is now moving towards digital. No, not that kind of streaming. So now we can get all of our music and we can get all of our movies, games. We don't have to buy physical computer games anymore, or even Xbox games, as you can all just download them. Everything is moving digital. So it only makes sense that if basically all aspects of our lives are going digital, we're using less and less mail, as we now have email and instant messaging and chat and whatnot. Everything is in that digital spectrum. So it would make sense that we would have to have a economy-based system that is also digital. So that's another difference between Bitcoin and fiat currency, is Bitcoin is digital. So we can send and receive money through our phones, through a computer, or we can swipe a card. Like PayPal and Visa. But of course, PayPal and Visa, those are sending fiat currency. So that is still the US dollar. So blockchain and cryptos can do basically all of the same things that PayPal and Venmo and all that stuff can do. It is just a cryptocurrency and not a fiat currency. So that's really the big difference, the big umbrella differences between a crypto and fiat. And obviously, all transactions in a cryptocurrency are tracked. So there's no double spend. You can't. It really cracks down on corruption, really, because it's forcing transparency. So the bank or a government can't, pay another foreign entity or a spy or a criminal activity, $50 million or something, and they're like, oh, well, we don't know what happened to that money. So it really cuts down on government waste. I don't know if you remember, but right after 9/11 or something, it came out that the Pentagon, in an audit, the Pentagon had like $250 billion in waste that they don't know where the money went. So it was $250 billion that they couldn't track. They didn't know where it went. So you can't do that with cryptocurrencies, because every transaction, every dollar, it's all traced. So it really puts forth transparency. So let me see. I think this is. Okay, so that's mine. So this is my really. Okay, let me sign back in here. So this is my personal Coinbase account, and I only use it just for either buying new Bitcoin, more Bitcoin, or sending it from an old exchange, and then into my bank account. So I gotta do my 2FA there. So let me see. So yeah, I don't keep any money on Coinbase. Sold, sent. Okay, so sent. So when you're sending or receiving, you'll have this. Well, you can search it on the blockchain. So this is what I mean by transparency and how it's all tracked and traced. So it's going to have an address, and this is going to be the only address that exists. So there's not going to be a duplicate address out there. Same for these hash rates. What these hash rates is just another address. And this is what's going to prevent things like double spend or whatever. So this is only going to exist just this one time. Same for all of these different hash rates or hash transactions and whatever. So so if I was to send, like, I guess, let's say this one here, however much this is, 0.009 in Bitcoin, and then this is the address or the transaction hash or whatever. So if I were to search for this particular transaction or whatever, this is how I would be able to find where it's coming from and where it's going to and how much it is. So this is how we can keep track of where the money is going and how much is being moved at any given time. Obviously, you can't do that with fiat currency. They can just, load some pallets up with cash and send it somewhere, and then we would never actually know or actually see where that money is going, in a nutshell. Okay, I think I talked too much on that one because we can go on and on and on about all of that. So let's move on to your next question. What is the difference between a wallet and an exchange? Okay, so first off, it's important to know that there are different kinds of wallets. There are hardware wallets. So here's like the Nano Ledger S. I bought one of these back when they first came out. Of course, it was like $200 then, and not $50 or $60. But it's literally just, it's really just the size of a USB drive. So I can attach it to my keyring and carry it with me, or I can leave it in my desk drawer or something. And then you also have other versions. These are a little bit bigger, and some of them will come out with like slide-out keyboards. So the purpose of these two, for example, in this example or whatever, are essentially just what like your wallet or your purse. It's just a physical hardware, physical device that you can store your cryptocurrencies on, and it serves the same purpose as like the wallet in my back pocket that holds all my credit cards and cash and stuff. Really, that's the only difference between a crypto wallet and a regular wallet. So those are hardware wallets. Now there are digital wallets. So you can download certain wallets onto your phone, and it serves the same purpose. So you can turn your cell phone into a wallet. Trust Wallet is probably one of the more popular ones and more secure ones, and I think they're also FDIC. I'm not sure if they have like some kind of insurance policy in case you were to lose your wallet or something. But you can download this directly onto your phone, and just as I said, you can buy crypto directly from your bank account, and you can exchange instantly. So you can swap. So say I have, they're using this example right here. So you have Ethereum, and you want to swap it for DAI. So you can do that automatically on the exchange without having to sell Ethereum into Tether and then use Tether to buy DAI, or to sell Ethereum into Bitcoin and then use the Bitcoin to buy DAI. It does an instant swap. So that's one of the benefits of having the mobile wallets. So I kind of have both. I don't really use the wallets because I trade. And I basically just, if I need cash, then I'll just, take it out of an exchange, send it to Coinbase, and then convert it into cash, and then send it to my bank account through PayPal or something, because that's just the easiest. So to fund them, there's videos on the ledgers. There's videos on Trezor on YouTube on how to put your cryptos in there. So if you're looking to buy for a long term and there's a coin that you like, so say you want to buy, let's just say you want to buy Bitcoin, and you want to stash it and store it away for 5 years or however long or whatever. So you would buy it off an exchange, Coinbase in this example, and then you would just send it to your Trezor or whichever device you use. But you'd have to watch the videos on YouTube on how to do that, because they have their different different steps to do so. Okay, so the next difference and the best ones to use. Again, I kind of gave you I dropped that one already. Trust Wallet is really good. Atomic Wallet. Atomic Wallet is another popular one. They're kind of up there with Trust Wallet. So this is another good mobile wallet to use. And some of these mobile wallets, you can actually stake your coins on. So staking is like if you bought Netflix or something, and Netflix pays you a dividend. So it's essentially the same concept. So if you're staking it, then you're buying the coin, but then you're putting it into this little algorithm which is essentially staking your coins. So when you're staking your coins, you're becoming part of the network that helps keep that network secure and running good and speed and all that stuff. And as a reward, you get free coins. So it's essentially just like a dividend. So I think Trust Wallet and Atomic Wallet both do that, and there's a bunch of wallets out there, a bunch of mobile wallets. Samsung has a couple wallets to download from, and a couple other coin companies have created wallets. So they all kind of do different things. I like Trust Wallet just because it's the most popular. It's really simple to use, and they're pretty secure. Okay, so how do you buy and sell, and on what platforms? So what I do, like I showed you a minute ago, is I use Coinbase. So I created a Coinbase account. I went in and, of course, had to send them picture ID and all of that stuff for identification purposes and verification and all that stuff. Linked my bank account to them. Linked my bank account to my portfolio or my profile or whatever, so that I can buy cryptocurrency on Coinbase, from my bank account. So if I were to, let's just say I'm going to buy Bitcoin. So see, I got my Chase bank account already linked. So this is, you get $25,000 buying limit if you buy directly from your bank account. And I think if you just start out, your limit using a debit card is not as high. I think over time, as your account becomes more verified and you're using Coinbase more, then I think they up your limit. So I can buy up to $7,500 worth of Bitcoin right now. So let's just say I want to buy Bitcoin with my Chase card. So see, now I selected my Chase card, and let's just say I want to buy $100 worth. Okay, so I'll buy $100. Okay, so this is how much Bitcoin I'm going to receive. And say pay with my Visa Chase card. This is the price that Coinbase is selling it at. Now Coinbase is a bit of a ripoff because the current price is about $60 to $70 less on Binance right now than Coinbase is showing. So they're going to rip you off. And then of course my fee. So I'm really going to get, out of $100 worth of buying, I'm going to get $96 worth of Bitcoin. And it's instant if you use your debit card. So I'm just going to buy $100 worth of Bitcoin. Sometime today. Oh, you know what? I think it was because might be because my debit card expired and I got a new one. It's the same number. Alright, what's going on? Alright, not doing it. Okay, so let's go. Okay, so let's log into my other Coinbase account. Okay, so for whatever reason that was taking way too long. Okay, so let's just say here's your portfolio balance, and you want to send that. Now this is an exchange, so you can trade. Okay, so here's all the coins that you can buy and sell on Coinbase. But there's not margin on Coinbase itself. You have to do that on Coinbase Pro. So here's by Orchard, and of course you can do that with Bitcoin or with US dollar or whatever the pairing is allowed. So those are the coins on Coinbase, but again, I don't use Coinbase to trade. Okay, so what I do is I trade on CoinDCX because this is an actual legit exchange. So for example, if I wanted to send money from Coinbase to the exchange, okay, so I got Bitcoin right here. So I'm going to click Bitcoin, and it's automatically going to show send. Okay, so I need the address because I need to know where to send it to. Okay, so we can come up here to funds and we can click deposit. Now this is very, 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 very important to know. So when you are clicking wanting to deposit something, I mostly just deposit Bitcoin. I don't really send any other crypto to and from other exchanges. I just keep it all simple and keep it all in Bitcoin. But it is very, very important that when you click on a coin that you want to send, that you do not screw up this address right here. Now they made it simple, and you can simply copy it. Because let me show you why. So this is the Bitcoin address. So let me back up, and you can see, let's just say Tron right here. So see, Tron has a completely different address. So if I'm in Coinbase and I got Bitcoin pulled up here, and I'm trying to send Bitcoin to this exchange, and I accidentally copy this Tron address and then stick it right here, it's not going to send it. You're going to lose that money, however much money it is. So you have to make sure that whenever you send and receive a cryptocurrency, that is in the same currency. So if you're sending Bitcoin, make sure wherever you're sending it to is a Bitcoin address. So I'm going to copy that there, and I'm going to post that there, and let's just say I want to send $50. So I'm going to send $50 from my account, and this is where it's going to go. So what I did again is I copied my Bitcoin address from my trading account, and I posted it there. See, I'm paying with Bitcoin, and I'm going to send $50, and because it's showing that this account has $277. So I want to send $50 of Bitcoin to that account. So I'm going to hit continue. Okay, and this is the US dollar amount. This is how much Bitcoin it's showing. And then, of course, you got a little fee. And then I'm just going to hit send now. And hopefully, and I got to input my 2FA. So hopefully you have a 2FA on your phone for extra security. And I see that change. So let's see, there we go. So now it's in progress. Okay, so now I can see, let me refresh. And then there it is. So it's got the date, it's sending Bitcoin, $50 worth or 0.0048. And we can click on it. And there's a confirmation. So the confirmation right here is the network has to confirm that transaction before it can send it. Bitcoin is kind of slow. It may take, depending on how congested the network is, it can be 30 minutes before it goes to this account, or it could be 2 hours. But it did the transaction right because I'm sending Bitcoin to a Bitcoin address, so I'm going to get my money. and you can see that it's just pending. So when this says complete, then you'll have your money in that account. So we will look for it, and it'll pop up here. So this is what I'm trading with on CoinDCX. So I don't have all of my money on one exchange. I'm kind of spread out on 3, maybe 4. But this is where I do most of my altcoin tradings, right here on CoinDCX. Okay, so that's how you buy and sell. So vice versa. Well, I don't have any available Bitcoin because I'm all tied up in positions. But just do the opposite. So if I want to cash out Bitcoin, send it to Coinbase so I can turn it into cash to put it in my bank account, it's the opposite. So I'd go to funds, I'd go to withdrawal on whatever exchange. Again, I want to click Bitcoin because I want to send Bitcoin from this exchange to Coinbase. Okay, so I would go back and click Bitcoin, and I want to receive. Okay, so this is kind of like the little warning that I told you about just a second ago, that if you send crypto to the wrong address, you lose that money. So you have to make sure that if you're sending Bitcoin, it goes to a Bitcoin address. If you're sending XRP, it goes to an XRP address. So you have to make sure that you are very well aware of that. So I understand. Okay, so here's the address, and I'm just going to click this little copy button right here. And I'm just going to paste it right there. And then the amount, I don't have any available Bitcoin at the moment on this exchange. So you'd put the amount there, and then you'd hit send. Okay, so then now I'm sending from my trading account to Coinbase so I can turn it into cash. This one is not linked to my bank account though. But to do that, see, so here we have US dollar. Okay, so I can click on that, or actually I can go to trade, and I can sell. Yeah, sell all. Okay, so I can sell all of the Bitcoin. So you see I'm selling Bitcoin, deposit to cash, US dollar. Okay, so I can just hit sell all, or I can sell $100 worth and turn it into cash. And then you complete that, and then from there, so here's a withdrawal. I don't have a bank account linked to this one because this is our trading fund that we help members who are in emergency situations or whatever. So we kind of look out for one another. So if somebody in a lost their job or is struggling from COVID or whatever, we have our own little fund that we can send them money to kind of help them get by. But I can go here and I can go to withdraw, and then another pop-up will pop up right here, and then I select PayPal and I just send it to my bank account, and then it's practically instant. So I can send Bitcoin from CoinDCX or from any trading account. I can send from my trading account to Coinbase, sell the Bitcoin into dollar, and then transfer it into my bank account all under 2 hours. And I think I can do a maximum of $20,000 because I think that's the max that PayPal allows you to withdraw. Okay, so that is how you buy and sell Bitcoin. So now let's say you transferred your Bitcoin to the exchange. Oh, look, see, there it is. Now it popped. Now that $50 popped in there because a minute ago it was all zero. So we can go and track that. Oops, Bitcoin. Okay, so we got two confirmations. So roughly around 2 confirmations now is roughly about what a good confirmation that, hey, your money's going to be there. So it's good. So now I got $50 in there. So this is Bitcoin. So now I can use Bitcoin to buy any of the altcoin pairs against a Bitcoin pair. So I can buy any of these, and you can see here this is the /BTC. So I can buy any coin now with that $50 using Bitcoin. If this was Tether USDT, then I can go search all the USDT coins. Oh, nope, maybe. There it is. And that's just on this exchange. Other exchanges will have that same option. So I got $87. It looks like available in USDT. So if I want to trade against the US dollar pairs instead of against Bitcoin pairs, I can do that also. And I'll probably have to make another video to show how to do that exactly. So let's say I got that $50 and I want to buy ION. Okay, so let's just say this is my coin of choice, and I want to hit long, which is essentially buy. I can select my leverage for this. Well, I'm on leverage. I'm on leverage. If you're on spot, spot is essentially just buying it outright. Leverage is like playing with borrowed money. So if I wanted to buy ION, okay, so the quantity, I don't really know because I only got $50 I want to buy for BTC. So I just want to use all $50 to buy ION, and that's how many coins I'm going to get for it. And I can just hit the buy button. Okay, vice versa. If I wanted to sell it, hit the sell button, and I can choose whether if I want to sell half my position, all of my position, or I can enter in manually how many coins I want to buy. So if I have 10,000 coins, but I only want to sell 2,000 of them, then I can just type that in, and then it'll show you the price of how much you're going to get. I'll probably have to do a little bit more videos on buying and selling because that can take up a lot of time on its own. Shorts and longs. What is the difference between the two? Okay, essentially, let's go to margin. Okay, so if I am, and let's do BTC. Okay, so you long and shorts. Long is essentially you are betting that the market is going to go up. Short is the opposite. Short is you're betting that the market is going to go down. So if you're long, you want to see the price climb, and you make money as price goes up. Now, if you are short and the price of the asset goes up, you lose money. Okay, vice versa. If you are short, you're betting that the market is going to go down, and as the market goes down, you make money. But just the opposite of the long, if you go short, if I'm saying, all right, I bet we're going to drop and Bitcoin's going to come down here to $9,400. Okay, but let's say the trade goes against me and I bet wrong, and instead of going down, it goes up. Now I'm losing money. So that's the difference between a long and a short, essentially. And again, that's a whole nother video that I can I'll probably have to make and go hours into or something for teaching how to do that. But essentially, a short is you're betting the market goes down. A long is essentially a buy, in that you're betting that the market goes up. Now that is if you are margin trading, of course. So you can make money as the market goes down. You don't have to sell Bitcoin and go into Tether. But that is one option if you are spot. So spot means you're not buying, or you're not playing leverage. You're just buying an asset outright, just straight cash. So if you got, let's say you got $5,000 into Bitcoin right now. So let's just say you got half of Bitcoin, and the market looks like it's about to dump. You can just sell it, and it'll automatically sell it into a stable coin. So in this case, it'll be USDT. So I chose Tether. Okay, so it'll automatically sell that into Tether. Whereas margin, we have leverage, and that was also one of your questions here. So leverage, 5x, 10x, what exactly is this referring to, and why is this important when utilizing a platform? Okay, so let me pull the Bitcoin chart over here for a second. Actually, I can look at Bing Bong. Okay, leverage. Think of leverage like a multiplier. I mean, everybody's played games at some point in time, and if you're playing a game and you're doing really good and you're getting points, and you start seeing these little multipliers pop up, 2x, 25x, you're essentially taking the original amount of points in that game that you would be playing, and when that multiplier pops up, it's multiplying those points. Essentially the same concept with leverage trading. Okay, so if I got $1,000 in my, or let's say $10,000 in my portfolio. Okay, and I want to put all $10,000 on a position with leverage. So let's just say 10x. It's already selected there. So you got $10,000 in your portfolio, and you want to put it all. You want to bet it all on a trade, and you want to go at 10x. So it's like taking your 10x or your $10,000 and multiplying it by 10. So you can essentially, it's like playing with $100,000. So you're borrowing the other $90,000 from the exchange. So here I have on Bing Bong. This is kind of a newer exchange that I've been playing with, so I didn't put a lot of money onto it and go heavy in it. So I got $3,600 here on Bing Bong, and if I put the whole position here, and here's my slider that can adjust how much I want to bet on a position, or I can just manually type it in. It's like, all right, I want to do $500, and I think the market's going to go up, and I want to make a little bit more off of playing with just a smaller amount. Let's put a 10x leverage on it. So now it's like I'm playing with $5,000. Okay, so now let's say Bitcoin goes up 5%. So now I'm essentially making 5% on $5,000, or this 5% move times that 10x leverage over my $500 position. So 10 times 5 is 50% of my $500 position. So I made $250 profit. So that's a 5% move, but because I have this leverage on, it's multiplying my gains, and I don't have to risk as much money. So again, because I had a $3,000 account, but I only wanted to play with a $500 position and not risk my whole account. Same with these other ones, 50x, 100x, 150x. I don't ever go more than 10x. 20x is even too risky for me because of liquidation. And you can see your stop loss liquidation price right here. So again, let's just put that at 500. Okay, so I'm going to, let's just say I want to long it, and I bet the market's going to go up. Okay, so here's my liquidation price. So that's what this means, this liquidation price. Let's go ahead and just put a line down here. $9,415. Let's make that a big fat red line. Okay. So this is my liquidation price. Okay, so I'm putting in a long right here at 10x with $500 because I think the market's going to go up. I think Bitcoin's going to pump. So I'm going to make profit as it goes up. In the event that it's a bad trade and the trade goes against me, now 10 times 10 is 100. So it's got almost just shy of 10% to go drop to liquidate that position. So if Bitcoin goes against me, it's only going to take a 10% move to wipe out that full $500. Okay, so if you were to put on a 20x, now it's only going to take about a 5% move to liquidate you. So now we're at 98.82. Okay, so again, $500 position. I think the market's going to go up. Now I got a 20x leverage on it. So now it's like I'm playing with $10,000 because 500 times 20. So if Bitcoin goes up, let's say it goes up 10%. So I make 10% on $20,000 or $10,000. So I'll make $1,000 on that trade. But if it goes 5% in the opposite direction, 4.5%, I would lose that $500. So this is the risk, of course, with playing with leverage. It's a multiplier, so you can make a lot of great money on the right side of the trade, and that's what I've done on CoinDCX with altcoins. This is how I took a $500 account and turned it into $53,000 in 4 months. That's kind of really impossible to do if you're not margin trading, but that's how I was able to quickly grow that account in such a short amount of time, was I used margin. Now, I never used on CoinDCX more than 4x, four times leverage, because that's all that it allows, and that's perfectly fine for altcoins because they can move in 5 to 10% ranges per day easily. So if you get it on a good trade at 4x leverage on an altcoin and it goes 5%, well, then you made 20% profit. And 20% profit a day is good money. Nobody's going to argue that at all. That's good, steady income. So that's kind of the quick gist of what leverage is. And as far as the important when utilizing a platform, BitMEX is the worst. See, like all of these wicks right here, and BitMEX is the absolute worst on it. It'll go on a stop loss hunt or liquidation hunt. So it could be, Bitcoin could be trending nicely, but it'll just get that one random wick and just shoot right up, just to liquidate everybody and take them out, and which would fuel the next push up. When it comes to exchanges, yeah, some of them are better than others, especially when it comes to margin. I haven't had any troubles out of Bing Bong yet. I kind of like them. And I also like them because I can play cryptocurrencies over here. Well, what am I doing? Come on. I can play cryptocurrencies as well as it also has like indices. I can do some Forex. I can do gold, oil even, all on this one exchange. For some reason it's not scrolling down so I can see that. Let's see if I refresh it. Oh, I got to do it that way. Okay, so commodities. So yeah, so now I can also trade gold, crude oil, and silver. Indices. I don't really do indices. Forex, and it's got some of the more popular foreign currencies. So I can trade the euro against the US dollar, and so forth. So crypto, of course, and these are my US dollar pairs. So that's essentially, I guess, a quick generalization of what leverage trading is. So it's very risky. You can make good money, but you can also lose money really quick also. So I would advise maybe paper trading using margin. And what paper trading is essentially you're just writing down. You're just writing it down on a piece of paper. It's like, okay, I'm going to bet $500. Well, let's bump that up. Let's go 50%. Oops, I don't want to do inverse. Okay, so I want to do 50% of my portfolio, and let's just do a 5x. So the lower your leverage is, the deeper your liquidation is going to be. So now you can see my liquidation right there. It's all the way down here at 84.97. That's close enough right there at 86. So now Bitcoin would have to dump all the way down here to take me out. Now if I were to go short, it's the same. It's the same, just opposite. Okay, so I'm going to bet that Bitcoin's going to dump, and I make money as it drops. Now, in the event that I'm wrong, now my liquidation is, because I'm going short, now my liquidation is at 12.2. Somewhere up there. Okay, so now Bitcoin would have to pump all the way up here to liquidate me. Now, lower leverages are safer. You can avoid a lot of wicks. You can avoid stop hunts. You can avoid liquidations, because that means now Bitcoin would have to pump 18% to get up there, and that doesn't really do that often. Okay, so that's essentially the gist of leverages. Okay, so your next question, how do you liquidate for USD, deposit in a bank account? Okay, we kind of went over that already with Coinbase. Selling it into US dollar, and then when you withdraw it and you have it linked to your bank account or PayPal or something, you can take it out of the exchanges that way. Okay, next question is, what is the difference between USDT and US dollar? They're both stable coins. USDC is, to be honest, it's safer than Tether. USDT is not really backed by fiat currency. It's not backed by the dollar. So it could be insolvent in a heartbeat. Tether can go to zero real quick, and people will lose a lot of money if they're holding any money in Tether as a stable coin. USDC is backed by the US dollar, so it's a safer hold. Some exchanges won't, see, like Coinbase. So if I want to send a stable coin to Coinbase, I can't send Tether because they don't have Tether, but they have USDC, and that's because Coinbase is trying to be as compliant with US regulations as possible. I personally don't like Tether, but I'm used to it. So if I'm just going to cash out and I'm not going to short Bitcoin, but I don't want to be in any position, I'll just go to spot after I sell all my positions, and I'm just holding Bitcoin, and I'll just sell it, and it'll just put it in Tether. So if I'm in Tether, Bitcoin can die for all I care. I don't care what it does. I'm out and I'm safe. But if I'm sending it to Coinbase, then I'm usually going to send Bitcoin and then cash it out into US dollar. So that's really the main difference. Tether is not solvent, essentially. How are you taxed on cryptocurrency? Okay, so CryptoTraderTax.com is what I use to do my taxes on cryptos. Now there's still a lot of finagling and loopholes and whatnot with the IRS in the United States as far as taxing cryptos. Some countries don't have tax on them yet. Obviously, we're the United States and we suck at everything, so we're not that lucky. And I do believe you're basically taxed on crypto the same as you would a stock. So it's just a capital gains tax, whatever tax bracket you fall in. So Crypto Trader Tax kind of makes that very simple. So you can select the exchanges that you trade on. So let's say Coinbase, and I'm going to click Coinbase, and it's going to import your trades. Click to upload your trade history, and you just simply connect your Coinbase account. So all of the trading that you've done on Coinbase, or for example, let's say Bitcoin, so all of these buying, receiving, selling, and all that wonderful stuff, it's all going to be automatically imported into this program, and it's basically just going to calculate all your taxes for you. So yes, you will have to pay taxes, a capital gains tax on crypto, just as you would a stock. Building credit with crypto, I don't think crypto is quite there yet as far as building credit. I would imagine that there would be, because there are crypto lending. Let's see, Ave Lend. I don't know if this is the website. Nope, that's not it. Lend coin. There it is. Okay, so you can earn interest on deposits, and you can also borrow assets. So you can essentially borrow crypto and use fiat as a currency, or you can borrow fiat and use your crypto as a so it's kind of like I guess one of those payday loan places or whatever. So you can, if you need cash, you can use your cryptocurrency as collateral, so to speak. So they have lending programs for crypto. I don't know if they have any credit building ratings or whatever for crypto yet. I don't think so. Okay, next question. If holding on multiple exchanges, how do you manage all of them? Ooh, very carefully. Okay, so again, like for Bing Bong, I mean, yes, on CoinDCX, I do have US dollar pairs that I can margin on. So let's say ADA, for example. I can short ADA, but I'm capped at a 3x margin, which is okay. No, I'm not going to complain about that. But I can go to Bing Bong. So here's ADA against the same US dollar pair, and I can margin up to as much as 35x. So I can play a little bit higher leverage on that particular pair. So I don't margin the US dollar pairs on CoinDCX. I play Bitcoin pairs on DCX because CoinDCX allows me to margin nearly all Bitcoin paired altcoins. So I can margin all altcoins on CoinDCX essentially. Some of these other exchanges that have higher leverages only offer a select few altcoins, and these are probably going to be your much higher market cap coins, and they allow higher leverages. So that's why I kind of split some money into multiple exchanges. So when Bitcoin pairs are good and they're popping, US dollar pairs are probably, maybe sometimes a little more stable. Bitcoin pairs typically pump harder and higher than US dollar pairs, so that's why I play Bitcoin pairs mostly. So I keep money on CoinDCX for that reason. So I can margin Bitcoin pairs, and I started playing on Bing Bong, so I can do some of these US dollar pairs at a slightly higher leverage at 10x. So the Bitcoin pairs right now are holding on by a thread. So this gives me the opportunity now to come in and maybe play some US dollar pairs. So how I'm managing that is the Bitcoin pairs are kind of stagnant. So they're not making a whole lot of movement. They're not doing much. Not a safe trade. So now I can go to other exchanges and you play US dollar pairs. I also have a Qcoin account. And Qcoin, I don't margin on this one. Yeah, I'm not a robot. All right, come on, 2FA. So there's certain coins on other exchanges that are not always going to be on other exchanges. So, for example, I bought. I got $4,000 on Qcoin, and let me see my assets, my main account. So there's certain coins on Qcoin that are not going to be on Binance. They're not going to be on DCX. And I don't margin trade on these exchanges on Qcoin. It's not liquid enough. So what I have is VRA, Veracity. Maybe that's my trading account. Okay, so yeah, so I have about 4 million coins of Veracity on Qcoin. So now I'm up to 3 exchanges that I have money on right now, and this is a buy and forget coin for me. Long-term play, just leave it for 6 months or so. So as long as I have my login information, I'm good. I don't need to worry about that because there are some other good coins, good new developing projects that don't have the hype that some of the Binance coin does. So there's a couple gems on some of these other smaller exchanges until they gain some popularity or whatnot. So that's 3 exchanges that I have money on. So that's my buy and forget bag right there. So I got 4 grand right there. Bing Bong, I got almost another 4 grand right there. And then there's about 28,000 on DCX. So I manage them based on my needs. So if I'm buying a good project, a good new project that's not on Binance, it's not on DCX, but it is on Hotbit or it is on Qcoin, then I'll transfer some money to those exchanges and I'll buy that coin and I'll just leave that coin on the exchange. Or I'll transfer that coin from the exchange to a wallet and just forget about it and leave it until that coin grows over time and it becomes a better project and gets listed on bigger exchanges and whatnot. So next question, if moving to a wallet, can you move back to an exchange? Absolutely, yes. The same way that I showed earlier how to I sent $50, same concept. Copy and paste the correct address and you're good to go. And do you have to have Bitcoin to purchase trade alts on exchange? I think we kind of indirectly answered that one. So depending on the pair, yes. So if I got Bitcoin pair selected here, so yes, if I want to buy any of these altcoins against the Bitcoin pair, then yes. For CoinDCX, for example, yes, I would have to have Bitcoin to buy that pair. And like I showed you also, if I wanted to buy US dollar pairs on CoinDCX, then I just need to have some freed up US dollar pair, or some Tether rather. If using multiple platforms, what's the best way to manage your portfolio? Well, okay, so again, the way I do it is I showed you Qcoin. I got about 4 grand on there, buy and forget bag. I don't have to worry about trading that for a while. I can keep track of it, and if I see that the coin has gone up, 300-400% or something over time, then yeah, sure, I can hop on that exchange after like 2, 3 months, 4 months, or whatever, and then I can sell the coin and lock in the profit that way. So with Bing Bong and CoinDCX, CoinDCX has an app, so I can trade from my phone or here on desktop. Bing Bong, they also have an app, but I don't really like it. So I can trade simultaneously on desktop at the same time that I'm trading CoinDCX on mobile. Just depends on what pairs that I'm in, whether if I'm in Bitcoin pair or the US dollar pair. But also, again, if Bitcoin pairs are popping, then I'm not really paying attention to my Bing Bong account, because this is strictly for US dollar pairs. So my focus is going to be on CoinDCX, and I can just leave this, sitting as it is, or whatever. Okay, so I've talked my head off here, and I hope I answered your questions at least enough to give you a little bit better general idea to get started, to maybe develop more questions. So I'm going to leave that there, and I'm going to drop this to you so you can watch it, and then if something needs to be explained a little bit better, we'll go back over it. Or if you have another list of questions that you have too, I mean, that's fine too. We'll take care of that also.